Good morning. Predicted Trades family. Hope everybody had a great weekend. Let's start with a quick review. Let's see, we had our week of chopping around in the quarter. We started off the quarter with a nice rush up, a reversion to the mean, the daily 21, which is this white stair-step line. We got there on Wednesday for a tap, and even Thursday at open, ran up and gave it another quick tap as it steps down every day that we're below it. It's one of the nice things about having these daily moving averages in the tool that is provided in the tool belt, because we can see where that average is live every day. We slapped it on Thursday and started a little fade down. We had our non-farm payroll jobs data on Friday, which came out favorable, but we dump because it likely means that they're going to raise rates more and more. And we dump right back down to this zone that we took off from on Monday. Actually, we did end the week slightly green. With the futures that opened last night, we had a little bit of a gap down, and we went down to retest this 36.21, which held and started to send us back up. So we're at this zone of support that held us up at the end of the quarter. Even though we did dump through it, we opened right back at it and took off. So let's see if this zone of support can continue to do that, to provide support and bounce us back up for today. But before we get going too far into what today can provide, let's take a quick look at our economic calendar for this week. The big events are FOMC on Wednesday. So we got FOMC on Wednesday, and then the other big one, we have CPI on Thursday. Just a whole mess of CPI, as well as our jobless claims. So this week is going to be pretty big for economic news come Wednesday, Thursday. We'll see if it drops us down to new lows, as everybody is expecting, or we'll see if we get some kind of silly bounce. We don't usually have CPI and FOMC back-to-back like this, but we have had it in the past. I seem to remember a CPI where a week where we had a FOMC that shot us way up, and then when CPI came in the next morning, it shot us way down, just engulfing the FOMC pop. So let's see what we get. I think the expectation is they'll raise rates again, the 75 base points. I think that's something like 80 or 90% the consensus. So let's see if that's what we get. And for today, makes it kind of easy that we have our zone of support here. We have our 30-minute squeeze going into open. Expecting this 30-minute squeeze to fire one way or the other, right? If we can't hold this zone of support, 36.21, 36.39, we're going to start slipping down to test 3600. This little shaded region, which is just another zone of potential support, where we have that second daily Keltner at. And should this start to give out, it's back to the current low of year at 35.71, 75. And then below that, next key level is 35.41. But if we can hold this zone of support and start to push back up, it's very much like last Monday. Can we push up to 36.68 can we continue up to 3708? That's where the daily 8 sat last Monday. That's where it sits again this Monday. Like perfectly the same spot right below 3708. We also, at the highs last week, rejected a trend line from the highs of the selling that started back in August. Made a little trend line there, and that's exactly where we rejected last week at the 21. And as we go into this week, the 21 is riding down that trend line. So if we can get going over the daily 8 back to last week's highs, we have the same trend line, the same daily 21 to deal with. One last thing. Go ahead and add our diamond, or our beast system in. Just because I wanted to note that for today, our outer shaded region pretty much overlaps that 3708, and our lower shaded region perfectly overlaps the current low of year, 3571. And as you can see, that 30-minute squeeze at our open range buy and sell zone. So the roadmap is set. Let's see if we can break back up and make it back to 3700. Let's see if we consolidate in between these key levels at 3621, 3639, and 3668. We could pop up to that 68 and basically just come back to digest in this range. And if we break down, I just love that perfect overlap. So today's pretty clear with the beast tool. We'll move on to NQ. Go ahead and mark this low of year back here. NQ coming into today, let's see. We're at this big key cycle level, 11,000. That's at our in our open range buy zone, pretty much right at the bottom. Let's see if we can stay above that 11,000 cycle level. If it can start to send us back up to 11,200, perfectly overlapping the purple shaded line, and then back to 300, where that daily 8 sits. If we start to lose 11,000, we could slip down to this zone with low of year and key level here at 950-ish, 942. And if we slip any further, we've got that outer shaded region down there, 10,850-ish. On the ready. Already trying to hold above cycle level 1700 this morning. Let's see if that can continue to hold. Looks like we've got our open range buy zone down at about 1695-ish. If we start to slip below those things, then we're going to 1680, 1665. But if we can hold above that 1695 and 1700, which is about where we opened last night. If we can hold above 1700, looking to push back 1720, 1740. YM. Actually did a decent job holding up and not getting too close to the lows from the end of quarter. Let's see, we're at this 29,315. Let's see if that 29,300, 315 can provide support to try to push us back up. Just like last Monday, up to the 650. But now that we are below, we fell below that 29,315. It could quickly give out and start sending us back to 29,200. If that starts to lose, then we're likely coming down to test 29,000 and this potential 850 down in our outer shaded region. Apple. I'll go ahead and take off Beast Tool. So Apple pushed off our zone of support, got up to this 144 and even tapped that 147.5 before coming back. And here we are again, back at that 140, 138.8, and 138. Let's see if this zone continues to provide support and turn us right back around to head back up with the goal of getting back to 144 and then beyond to these key levels. Apple did not quite hit the daily 21. Basically got back to the daily 8 and peeked its head above it just a little bit, but then back down. If we start to give out this 138, likely coming down to 136, 135, where that third Keltner to the downside sits. AMD just got destroyed after announcing 1 billion, less in their forecast for revenue. Kind of the same thing that NVIDIA did before earnings, last earnings cycle. So this one's beat up. 56 is a huge key level for AMD. If you go back to pre-COVID and even during the COVID run-up, 56 was a huge sticking point that we stayed under. And then once we got through it, we had our big run-up, to 100 and beyond. And now we're back at 56. So if we do start to slip down, kind of looking for 56 to stop this bleed. I know I don't have it marked, but I can just remember. I'm sure Richie can back me up that we remember trading 56 together a few years ago. So overall, just going to leave this one alone most likely. I want to see how it settles around 56 and if it can start to turn it around again. With the goal, obviously, of getting back to like 60 and then working its way back up. But this one's really hurting, so let's just let it settle and find its feet. And on Friday, I'm sure this was an amazing play down. Just barely any bounce, straight down all day. Amazon. Yeah, right, Richie. Everything's coming back down to these levels we can remember from way back a couple of years ago. Amazon did make it to a daily 21 last week. As I roll through these names, it's worth noting which names did make it to the 21, which names got bought up in that rally up last week, because if we are going to have another rally up into FOMC this week, I would look at those same names to have rotation into them. And I did title this prep, can we have another rally this week into FOMC? It should somewhat be expected if they are going to drop us down for new lows at the end of the week. But there's a lot of selling pressure out there. Everyone and their mother was going short from like Tuesday, Wednesday into the end of the week, and those shorts won. Let's see if they still are in control and try to push us further down. If Amazon starts to lose this 113.5, likely coming down to test 112, at previous low. And below that, we've got 111, where the second Keltner sits, and 106.5, where the third Keltner sits. Also have that psych level of 110. But if we can hold this 30-minute squeeze and start to make our way back up, looking to at least get back to the daily 8 and 15, which are sitting at 117.5-ish. And beyond that, psych level of 120, where the daily 21 sits. BA. Overall, actually did a decent job of holding up in its flag and not coming back to engulf the week. So I like that BA at least is trying to hold up. Let's see if it can hold above this 128, get back above that 130 psych level, and try to make its way back up to the top of this 4-hour squeeze, which sits up near 135. If we start to give out 128, we are beginning to dump this flag, and BA could catch up with the market, adding some selling pressure in a big name that at least did a pretty good job of holding up last week. So let's see if we can stay up in this range now that since we held it last week. Could lend to the upside if we at least stay above 128. We do have this little gap to fill back to 126 if we start to slip below 128. And we have that Keltner at 125. So if we lose 128, coming down to test that 125.5, 126. Cat. Same thing. Held up pretty well. Above its daily 21. We have a 2-hour squeeze that started to form around us at 174 on the bottom, 180 on the top. So let's see if we can work from that 174, 175 back up to 180 with the goal of getting up to this daily 50 at 185. If we start to lose that 174, likely coming down to 170 where the daily 15 and that first Keltner down sits. But just like BA, we made it up into a range and we held. So looking decent for a potential strength to continue to the upside. Coin. Had some great moves Monday, Tuesday. But on Friday did come back into Monday's levels. Did at least hold up at the 65 that was resistance on Monday kind of became support. So let's see if 65.5 can continue to hold and send coin back up with the goal of getting to this 69 where the daily 8 and 21 sit, psych level of 70, and if we can push back to this daily 50 at 74. And that first Keltner at 75. If we start to give out that 65, we are likely coming back to test 62, where we bounced Friday and Monday. Below that, psych level of 60. Google did a decent job. I mean, it did obviously sell off, mostly in pre-market, and just slipped from 100 to about, 98.5-ish on Friday. A little gap down. Let's see if we can continue to hold the bottom of this 4-hour squeeze at 98. We also have pre-market low there as a zone of support. See if that can start to send us back up to 100, where the daily 8 and 15 sit. And if we can get beyond that, back to 102, where the daily 21 sits. If we start to give out that 98 and pre-market low, we'll likely come back to about that 96.5, 96, kind of where we started last Monday and took off from. GS does not report this week, but some banks do start to report this week. Ooh, that reminds me, let's pull up our earnings schedule. There we go. Let's pull this on over. Make it a little bigger so we can see it. There we go. Here's our earnings schedule for the week. You can find this in our earnings channel. Let's see. Looks like we have some TSM reporting. Something to keep an eye on. Some travel. JPM. Oh, there we go. Here's the bank stuff coming in on Friday. JPM, Morgan Stanley, Citi, Wells Fargo, Bancorp, PNC, First Republic. So finance kicking off earnings at the end of the week. Not much before that worth looking at. Maybe that PepsiCo, but I'm not going to be trading that. Ooh, Domino's. But either way, we got big bank earnings this end of this week. Will start to set the tone for finance earnings. So something to keep an eye out for once we get to the end of the week. Got a nice steady fade here, and we're back at psych level 300. So draw your trend lines from highs. We could break those early today and start a run up. Start a run up this week in finance leading into their earnings. GS could see that love since we have, most of the other names reporting this week. You could see a sympathy move off on GS. So let's see if we can hold 300 psych level at the lowest, that 298 at the bottom of these squeezes, and kind of at the top of the range from the end of the quarter. We can hold here, looking to get back up to 305, where the daily 8 and 15 sit. And if we can keep going past that, 310, where the daily 21 is slowly catching up to. JPM, not going to be touching it because it does have earnings this week, but same story. Let's see if it can break through the downtrend, which would be getting over about 107. It's basically opening in the middle of the range that we had at the end of the quarter. Let's see if 105 can provide support to get it back up to 108, where the daily 8 sits, and beyond that to 110, where the daily 15 and daily 21 are kind of straddling. Meta. Man, I tell you, when the market's slipping, Meta just gives it out. Right back near these previous lows at 132. Let's see if they can hold. Start to set it back up. But this name just continues to be weak. If it gives out that 132, we got a cycle of 130, and then that third Keltner down at 127. But if it can hold and try and make its way back up, we've got our moving averages above around 138, 140, and 144. Microsoft. At the end of the quarter, made it down to this big key level, 232. For me, it's 232.86. Let's see if that can provide support again and start to send it back up to this 240, 241, which was the top of the range at the end of the quarter that we fought back to and then became support before tearing right through it. So let's see if we can get that repeat move. If we start to give out this 232, we've got psych level 230, and then below that, the next zone is down at this 222.5, 225. Third Keltner sitting right in the middle of that zone. So if Microsoft continues to slip, that's kind of the destination that it'll get to next. Netflix. Finally gave out these moving averages last week and just dumped into close right back into the previous zone that we consolidated in before breaking out. And Netflix, broke out at the end of the quarter and then just parked itself up in this range. Now we're back. So let's see if this previous zone is still support and can send us back up. Basically looking for that low pre-market low print to hold around 222. If that gives out, we're coming down to test 220 and 215 at the bottom of this 2-day and 1-day squeeze. Netflix does report, not this week, but next week, I believe, yes. Next Tuesday. So let's see if we could get a run up this week into earnings for Netflix. Looking for that 222 to hold, start to send it back to 230, 235, where all of the moving averages are stacked. And then beyond that, 240, 245, 250 at the top of this daily squeeze. NVIDIA got beat up along with AMD and the rest of chips. Back down at this 118, 120. Same as everything else. Let's see if it can provide support to get back up to 125. 127 where the daily 8 and 15 sit. 131 where the daily 21 sits. But, chips not getting the love lately. If we do continue to slip, 118. What is this? A daily squeeze starting to form around that 116.5. So that might just hold us up. But if we slip through that, we've got 112 where that third Keltner sits and psych level of 110. QQQ. Barely into the week green, basically opening in the same spot, small gap down. Let's see if this 267.5 and 267 can provide support at the bottom of this 30-minute and 1-hour squeeze. Looking to get back up to and through 270, on top of that 1-hour squeeze. And if we can push through that, looking to engulf Friday and get back to this zone around 275. If we continue to slip, we've got that low of year around 264.5-ish, 264.30-ish. And should that and 264 start to give out, we're probably going to 260, where that third Keltner sits. SPX, let's see, pretty much filled this gap. We opened in it and dumped through it. So just a sliver of a gap left. Let's just, let me see real quick. Darn it. There we go. We can just update this right to there and then extend it over. Boom. I'd say this gap is filled, so we're just going to get rid of that. And connect one more back up to here. There we go. Just to say, we have a sliver of a gap back where we opened on Friday, near this 37.05-ish. And to fill the gap back to Thursday would be getting back to 37.45-ish as well. So, tiny gap down. So going to be opening near this 36.30. See if Friday's low. Around 36.20 can provide support. If we give that out, then Monday's lows around 3600, where that second Keltner sits. Should that start to give out, 3600 cycle level coming down to test this 3587, that previous low of a year, providing a little zone of support. And if we just keep on slipping, we've got third Keltner down near 3523 and cycle level 3500. But if we can get going to the upside, looking to get back to 3680-ish, 3700, and this little gap, right? SPY. So we did have this previous gap zone that we kind of gapped into. And this, if you go back, this was like the gap down right before the end of quarter that we stayed below. On Friday, we actually opened below that gap zone in this 370, fell to that 365, and then that 362. So, kind of looking for this 360, 362 zone to provide support. Start to send us back through 365 to 370 to engulf Friday. If we start to give out 360, our third Keltner, the downside, sits down at 350. And we've got that midpoint of 355. Tesla. Just slipped on through that third Keltner on Friday. Now we're down at cycle level 220. Premarket low at 218. Let's see if that'll provide any support for Tesla and start to get it back to 225, 230, 240 as the first goals to engulf Friday. If we start to slip through 218, 220, then we're coming back to 215, 210, 200 is a big old psych level. If we take a look at our daily on Tesla, post-split and everything, actually we're going to have to go back further. Let's go to that weekly. 200 is a big level of support. We can see that it bounced us back in April. We can see that post splits, that's kind of where we settled. 200 kind of at the lowest 180. So 180 to 200, big old level of support for Tesla coming up. If we do keep slipping, do expect it to hold there and try to work its way back up. You can kind of see this wedge with a flat bottom in this down channel. So if we do keep slipping, target is 200 for them to load up for a potential run up. So let's see if they do want to continue selling it and take it there, or if they're going to try a bounce around this 218, 220 to come back up. UVXY. So we had our trend lines that on Friday we tore right through both of them, and we've continued up to 13 pre-market. Now we're sliding back a little bit and basically going to be opening about where we close. So for downside in the market today, would not be surprised to see UVXY hold up to Friday's highs around this 12.6, 12.8. So for downside in the market, would not be surprised to see UVXY kind of hit that consolidation and turn around to head back up through 13 with the goal of getting back to about 13.5, 13.8 where that daily 200 sits. But for upside in the market today, we'll see UVXY come right back down off of these highs that it has been rejecting. Come back to 12.5, where that first Keltner up sits, and try and make its way back to 12, where the daily 8 sits, 11.5 where the daily 21 sits. We got a reversion to the mean and scooped up off of it. Let's see if we can get back to the mean and allow some upside in the market, or if this is going to just keep trudging up through those highs. VIX. Big old gap up in VIX, up near 32.5. For upside today, looking to give out that 32.5, come back to 32 Friday's highs, and maybe even slide on back to 31 and the daily 8 here. But if we're going to see more downside today, likely see us bounce at 32.5, maybe 32 after filling the gap, and come back up to test this 33.5. If we see some even more selling past that, the big key level is 35, 35.3, up at the top of this daily squeeze. Worth noting, VIX is settling into a daily squeeze. So let's see, we might see more selling today, come up to hit this daily squeeze, and then roll over. But if VIX can at least get back to 32 to fill the gap, we could see a good morning drive. Ultimately, if we were potentially to repeat last week's rally and rally into FOMC, looking for VIX to get back to 30, just like we did last week. But yeah, that's pretty much it today. Thanks for tuning in to Prep. Welcome to our new folks that joined last week. You should be all set up on Access. And let's have a fun day trading. I'll see everybody in chat. Good luck today.